Today we'll be delving into the latest forecasts for Rivian stock, examining the rise in short interest, and what it means for investors like you. Plus, stick around till the end where we'll be discussing surge signals for the next trading session and what they could mean for Rivian's stock price. So let's buckle up and hit the road. Alright, let's dive into this news piece. The article revolves around the forecast for Rivian stock and the increased short interest ahead of its earnings report. It's crucial to understand the potential effects of these elements on Rivian's stock price. Rivian has been performing well recently, with its shares now sitting at the highest level since December 13, 2022. It's worth noting that the stock price has skyrocketed by over 128% from its lowest point this year, a stunning comeback indeed. However, a different narrative is unfolding behind the scenes, reflected in the short interest in Rivian's stock. Short interest, which refers to the percentage of a company's shares held by short sellers betting against the stock, has surged to over 15%. This is equivalent to $2.29 billion and is the highest since May 2021. These short sellers essentially borrow and sell stocks, hoping to repurchase them at a lower price and pocket the difference. Therefore, a high short interest typically indicates bearish sentiment in the market. The short interest spike suggests that despite Rivian's recent performance, many investors are skeptical about its prospects, particularly ahead of the upcoming earnings report. Their doubts may stem from several factors discussed in the article. Firstly, there is a potential threat to Rivian's margins if it is forced to cut its vehicle prices, especially in the wake of Ford slashing the prices of its Lightning brand. If Rivian does have to reduce prices to stay competitive, this could significantly erode its profit margins, negatively impacting its earnings and, consequently, the stock price. Secondly, concerns exist over Rivian's growth slowing down. Even though Rivian beat analyst expectations by delivering over 12,000 vehicles in the second quarter, the pace of growth may decelerate in the coming years. If this slowdown is more rapid than expected, it could negatively impact investor sentiment and drive down the stock price. However, on the brighter side, Rivian's expansion into SUVs and trucks, highly lucrative segments in the auto sector, and the possibility of the company breaking free from its exclusive business with Amazon can act as significant tailwinds. Diversification away from a sole partner like Amazon can expose Rivian to new business opportunities, potentially improving its financial health and boosting investor confidence. Now, let's shift our attention to the surge signals for the upcoming trading session on August 7, 2023. The surge signals upwards are at $27.50, $28.23, $29.46 and downwards at $25.54, $24.31, $23.58. Essentially, these are the price points that could confirm a directional move for the stock. If the stock price approaches or breaches the upward surge signals, it may confirm a bullish or upward trend, indicating a good buying opportunity. Each signal level acts as a resistance level, breaking it indicates strong buying pressure. If the stock price breaks through $27.50, it's a positive sign, and the next resistance would be $28.23, and so on. A breach of $29.46 could confirm strong bullish sentiment and possibly spark a significant upward trend. On the flip side, if the stock price approaches or breaches the downward surge signals, it may confirm a bearish or downward trend, indicating a potential selling opportunity. Each downward signal level acts as a support level, breaking it indicates strong selling pressure. If the stock price falls below $25.54, the next support would be $24.31. If the stock breaks through $23.58, it could indicate a strong bearish sentiment and possibly trigger a significant downward trend. Remember, these surge signals are not guarantees, but indicators based on past trends. External factors like news, market sentiment, and economic indicators can influence the stock's direction. Now, before we wrap up, let's take a moment to consider the question: do you think the benefits of Rivian's expansion into lucrative auto sectors and possible diversification away from Amazon can outweigh the potential risks, such as price reduction pressure and slowing growth? I'd love to hear your thoughts on this, so don't hesitate to leave a comment below. And if you found this analysis helpful, be sure to hit the like button and subscribe for more in-depth discussions. Remember, the more informed you are, the better decisions you can make. Thank you, and until next time, stay tuned.